Hello guys, this is your modern day spokesperson and welcome to my channel. If you're new, please like and subscribe, and if you've already subscribed, welcome back to the channel. And I'll also like to give out a shout out to Fukilim Tembu and Proxy Zulu. If you'd like me to give you a shout out, please leave a comment on the comment section, and let's begin. So as I promised last time around in my last video, I said we are going to be looking at employee benefits, that is standard IAS 19. So I'm going to give you this tutorial in two parts. So this is part one. The objective of this tutorial is to disclose employee benefits in the profit before tax note. This is basically the skeleton. I'm sure you're familiar with this one, the profit before tax. Profit before tax is stated after taking the following into account. Employee benefits on a given year is made up of short-term employee benefits, post-employment benefits. These two are the ones that give us the employee benefits. And then financial liabilities on the same year, the provident fund, if the question does provide such information. But typically, this is how your skeleton will look, but not limited to this. No? So please study this together with your official study material. So now let's look at the types of benefits. So quickly, let's look at the short-term employee benefits. This includes your wages, salaries, paid annual or sick leave, bonuses, profit sharing. These benefits are limited to current employees only, the short-term benefits, and are payable within within the 12 month of the reporting period. Basically, it means that they should be paid within a year. So anything that falls beyond that scope does not fall under short-term benefits. Now we have post-employment benefits. These are your so-called retirement benefits. This is your pension or other retirement benefits, such as post-employment medical care. Some companies offer that. And lastly, we have your termination benefits, not to be confused with post-employment benefits. This includes your lump sum payments if your employment has been terminated, no? But not limited to this. Okay, so you can read more on this on your official study material, guys. This is just to remind you and get you geared up for the lesson that I have prepared for you today. Okay, now let's look at a typical example here. No? So we've got Make Peace Ltd is a small flower shop in Chedza City. It has 7 permanent staff members. The gross remuneration to employees for the year ended 31 December 2020 amounted to 800,000. The company's contribution is 11.5% of gross pensionable remuneration for the year ended 31 December 2020. This is the contribution to the Provident Fund, right? And then 26,000 relates to the 2019 financial year. All employees in this company are part of the fund. That means they all contribute. Payments made to the Provident Fund contribution. Sorry about that. Payments made to the Provident Fund. These are the contributions by Make Peace Ltd amounted to 85,000 in the current year, right? So now here, the interesting thing that we need to look at here is the year end, the total salaries that are being given to the 7 employees, the amount or the percentage. They didn't give us an amount just yet. It's the percentage that we use in order to calculate the contribution to the Provident Fund. And they also threw in something which is from a previous year, which is the 26,000, right? Okay. So now, this is the time where you pause the video, have your information, like your little data set there, and just organize it so that you can be able to prepare your calculations. Remember, you must always have the skeleton, the one that we spoke about here. This one, you need to keep this one in mind. You need to know it by heart. So this is what you need. It's gonna make your learning very, very much simple. Okay, so now we're pausing the video there. Okay. Now for the solution, this is how your solution is going to look like. Profit before tax is stated after taking the following into account, right? So your employee benefits. Now this is where you need to pay careful attention. Your short-term employee benefits, remember, includes salaries, bonuses, or wages. Is 800,000, as we were given in the question, in the information, because in this particular question we don't have any bonuses, we don't have any mentions of paid leaves or anything like that. It's just straightforward employee, short-term employee benefits. The total salary is 800,000. And now the post-employment benefits. Now this we have to calculate. Gave us we got 92,000 for the post-employment benefits. Now how did we get to this figure? Now let me show you here. Our gross remuneration is 800,000, right? And remember on the question the information said the contribution to the provident fund is 11.5%. So 800,000 multiplied by 11.5% gives us the 92,000, because this is what our post-employment benefits. So 800,000 plus the 92,000 gives us a total of employment benefits of 892,000 for the year ended 31 December 2020. Right, guys? So, guys, if you don't understand any of these things which I'm saying, or maybe a particular part is not really that easy for you to grasp, just leave a comment on the comment section, and I will address it on part 2 or on the next video. Remember, this is just part 1, right? It's a simple layout. It's just part 1. We're gonna have part 2 where we're going to have employees having bonuses and taking leaves and whatnot. Okay, now let's come to the second part of the answer, the financial liabilities. Now remember, this statement, sorry, or this note is going to be on the side of your employer, right? So the provident fund becomes a liability in their eyes. I'll explain why that is the case. Financial liabilities as at 31 December 2020, the provident fund. So this is how you come about to this figure of 33,000. Remember, we were told that, actually we calculated that our post-employment benefits gave us 92,000 for the current year, right? This is the 92,000. Now, and we also told that 85,000 was paid in the current year, of which 26,000 relates to the previous year, which is 2019. So this is why we subtract the 26,000 from the 85,000 which was paid, right? So this figure is going to give us, let's go, 85. Hope you can see 85,000 minus 26,000, right? It's going to give us 59,000. So we've got this tool will give us 59,000. So the 59,000 has to be subtracted from the 92,000. I will explain why that is the case. Okay, let's go 92,000 minus that will give us 33,000. Thus we have a 33,000 on the provident fund amount for the current year. So this is why we need to subtract these two figures from our given or our calculated post-employment benefits. I remember the contribution of 11.5%, which we calculated for the current year, amounts to 92,000 rands, right? This is what is expected to be contributed during the course of the year. And now we were told on the information that was given that 85,000 rands was paid into the provident fund, right? Of which the 26,000 relates to the previous year. So this is why we need to subtract the payments that have already been made from the current figure that we are expecting to make. This gives us 33,000. So that means the company has a liability of 33,000, which is still to be paid to the provident fund. This is why it's a financial liability. This is the amount which has not yet been added to the provident fund. So guys, this is basically the 101 on employee benefits. Like I said, there's going to be part 2. I'm going to address most of the more advanced questions, and if you have any problems, please leave a comment on the comment section and I'm gonna catch you later. Remember, a great man once said, learning is not a spectator sport. So guys, if you want to get to master this topic, you need to interact with me. Cheers.